So I know the past few weeks I've been reviewing companies that have been pretty boring. And I did that with the intentions of creating a more defensive portfolio than aggressive. But I was reviewing the portfolio and kind of noticed that it's a very safe portfolio. Performing well? Absolutely. But I wanted to shift gears and talk about something that might be a little bit different than spices in your cabinet or chemicals you see at restaurants, and do something that's just a little bit more exciting. So for this week, we're going to be taking a look at Activision Blizzard. Hey everyone, and thanks for joining me today. My name is Matt, and as I said in the intro there, today we are going to be taking a look at Activision Blizzard for our Watchlist Wednesday portfolio. Now, just to get this part out of the way, this isn't financial advice, this is just for your entertainment. If you think you need advice, certainly speak to a financial advisor, and invest at your own discretion, always a risk of loss of principal, whatever other disclosures I'm supposed to say. Also, I guess I should say, I have owned shares of Activision. I've sold out of them, unfortunately, but neither here nor there, so we can move on with the rest of the show. So right now, it really feels like the stock market is almost like a war zone, so it only feels appropriate to be looking at Activision for this week's Watchlist Wednesday. And if you're not familiar with Activision or Activision Blizzard, they are a video game holding company. Some of the names that fall under Activision Blizzard that you might recognize would be Call of Duty, World of Warcraft, the Candy Crush Saga, and the one that has been near and dear to me since I was in elementary school, Tony Hawk's Pro Skater. Now, before we move on, I just want to say I do play video games, but I am not what I would consider a gamer or that heavily into video games. I just have a select few that I like to play, and if you're curious, usually I do play Call of Duty. I'm not the best at it, but I also play NBA 2K, Grand Theft Auto, Red Dead Redemption, and I just started playing Skater XL. So don't really have a huge variety of games that I play, so that's why I'm saying I'm not a gamer, so my knowledge here is a little vague, but it is something that I'm interested in, and I obviously see some potential in the video game industry looking forward in the future. And I also want to talk about why I'm reviewing Activision, and it's not actually because the stock market is like a war zone. I just thought that was kind of clever as I was writing this. But one of the reasons why is because I was listening to the Mulvihill podcast sometime last week, and they were talking about the video game industry specifically. And it's something that I've thought was a profitable industry. Obviously, these games are selling for more and more of a premium. I remember when a brand new video game was like $30. I think they're now about to push that to $70 a game. But I didn't realize how much potential was actually there in the video game industry, with things like Minecraft changing the ways for players building the maps on the game, or things like Fortnite that are just free to play, and then basically you pay for upgrades and everything. So, and also with the addition of esports. So the video game industry is really one that was kind of steady for a while. Obviously we went from Pong to Mario Kart to Grand Theft Auto, but now it really seems to be skyrocketing into a whole new direction with this esports and just user-created content. So it's something that I actually thought was pretty interesting and one that I wanted to look into more. The other thing is, as I mentioned, I like video games, but it's not necessarily what I would say my cup of tea is, or it's not the area that I feel I'm the strongest in and the most knowledgeable. But that being said, Activision is a name that I've recognized since I was playing the PlayStation 2. So it's something that I've been seeing for a very long time, and I always say invest in what you know. Generally, the three biggest names I always think of are Activision, EA, and Rockstar. So I figured might as well start with Activision for this one. So for this week, I want to start with the earnings call. Now, earnings calls have been pretty much one and the same recently. A lot of people have just been talking about how the coronavirus affected them, what it's done to their business, and obviously I've been reviewing a lot of companies that have remained profitable during the coronavirus. And that was obviously a big part of Activision as well. The biggest things that they were hitting on was the significant increase in active users during the second quarter of this year, which honestly is expected. With people staying home, if they didn't see a significant increase in active users, then I would think something's wrong. So it makes sense for them to have a huge increase. That seemed to be one of the biggest focuses of the earnings call. But just to give some numbers for that, they added 100 million active users during this second quarter, and also saw an increase of they also saw the game time in time. What am I trying to say? They also saw the time spent in their games increase by 70%, which is a significant increase. But again, I don't know how you necessarily project what you would think people would increase by, or how much more time they'd spend playing video games during a time where they're staying at home anyway, but 70% is a significant increase nonetheless. Since they launched Warzone, that basically Call of Duty version of Fortnite, they have had an additional 75 million customers start playing Call of Duty. Now that was the part that I thought was interesting, because I'm sure I'm not the only one that's noticed that video games seem to be more and more like apps on your phone, or game apps on your phone. And what I mean by that is it's free to play, but then you can pay for unique upgrades or add-ons to the experience that you have. So by adding 75 million customers to this free game, and also increasing the time spent in-game by 70%, they should be experiencing a significant portion of revenue from these, I guess they're called microtransactions, or like these smaller purchases in the game. And it's a really good way of creating a reoccurring source of revenue. I've talked in the past about how I love subscription services, and while this isn't a subscription service, it's a way for them to continue to make money when somebody already owns the game. So in the past, you pay your, we'll call it $50 because we're talking about the past, for a game. You get the game, and then that's all the money that Activision would receive until you bought another game, or until they came out with the next version of that game. But having these in-game add-ons that you can purchase allows for them to continue to be receiving money from somebody even after they own the game. So while it's something that I'm not necessarily a huge fan of as the consumer, as an investor, it's a great idea, and it's definitely something that Activision, as well as many other video game creators, have been taking full advantage of, and I think it's obviously safe to say that it's something that we'll see more and more of in the future. And last thing from the earnings call, while this has nothing to do with the stock itself, they did mention that they've added 75,000 jobs for veterans since 2009 through their Call of Duty endowment, which is just a great thing to see. I always like seeing businesses supporting other things than just their share price and their stocks. So seeing that they've created jobs for veterans, love to see that, and I think it's something that I would like to see in future earnings calls, seeing that number grow, potentially even exceeding 100,000 jobs. I should also just address their Overwatch League, which is an esports gaming thing that Activision has taken part of, but admittedly it's not something I know that much about, and just didn't have the time to be able to do a full deep dive into that. So if this is a stock that you are considering for your own personal portfolio, I would also look further into that if you haven't already, because it sounds very interesting and another source of revenue, but just make sure you look into that on your own and see what kind of risks might be associated with this Overwatch League. Alright, and so now we have the numbers. Now, for this week, I did decide to compare these numbers to another company. Again, since this is not completely foreign territory to me, but when it comes to analyzing it as a stock perspective, then it is a little bit foreign to me. So I wanted to compare them to another very recognizable name that's on the public markets, and that is EA Games. Don't try to ask me to do the EA Sports voice that they do at the beginning of the episodes. I wish I can do that for you, but I would probably sound ridiculous. So we have the two companies here side by side. I'll pop this chart up on your screen so we can follow along with this together. Starting at the share price, kind of an irrelevant statistic to really put up there on the screen, but as we can see, EA is trading at a higher share price at $135.70, where Activision is at $79.12. Looking at their market caps, I was a little surprised to see how much larger Activision is than EA. Now, without knowing other companies, I guess I could have thrown Take-Two on here, but without looking at other companies, I guess it makes sense for these to be some of the bigger companies in the gaming industry, just given how long they've been around. These are both companies that I've been seeing since I was a little kid. and they're still around today. So again, it makes sense for them to have such a large market cap. So for this week, you'll probably notice that the PE ratio looks a little bit different than it typically does. But that's because we're using a non-GAAP forward PE ratio. GAAP means general accepted accounting principles. You don't have to worry about that. I only studied accounting for a semester and GAAP made no sense to me. I know a little bit more about it now, but don't worry about what GAAP and non-GAAP is just for sake of this video. But it's interesting to see, so their normal PE ratios shows both of these companies trading at a premium. I think they're around $32 for they're around 32 times earnings for their current PE ratios. And when we look forward, we actually see that PE ratio go below 30. So there is the chance that these companies could be trading at less of a premium or potentially undervalued, meaning that there could be some form of significant growth both of these companies will experience in the near future. From this table, it's pretty obvious that EA does a better job when it comes to handling their expenses, given the difference in their net income margin. Now, they're both profitable, they both have fantastic balance sheets, and they are really financially sound companies. So that difference isn't a huge concern for me, but that is definitely going to give EA a bigger advantage should they be able to acquire other companies, come out with new products, join new leagues, whatever they might be looking to head towards, just since they're able to handle their expenses better than what Activision can do. And with the return on equity, this was a little interesting to see, given that EA is double what Activision has, but again, both companies that I would be comfortable with in the portfolio. And as we can see, Activision does have a little bit better of current ratios and quick ratios. Don't think either of these companies would have any issues getting funding should they need the money, but good to see that they have more cash or more short-term assets on hand than they do liabilities, again, which would help with either acquisitions of other companies, new product creation, you name it, anywhere they could really spend money. Now, when I was looking at these numbers, I have to say, I already had my heart set on buying Activision, but EA really puts up a good fight against Activision, and it made it a hard decision. But there was one thing that came down to why I picked Activision, and really it's just nothing significant, but Activision does pay a dividend. Again, it's not a huge dividend, but they do pay a dividend, so it's a little bit of an added incentive for me to purchase them, since they do have a little bit of a distribution we could take advantage of. If EA paid a dividend, honestly, I probably would have went with EA, but I firmly believe that both of these companies are worth having in your portfolio, and I might even consider adding EA to the portfolio in the future. Now, with all that being said, I do think right now both of these companies are at a little bit of a premium. They're both trading near their price highs over the past 52 weeks, which isn't necessarily the most ideal buying spot. So this is going to be one I'm just going to buy a small portion of. So I think for this week, what I'm going to do is just add 15 shares of Activision to the portfolio for two reasons. One, again, they could be trading at a premium right now, and there might be a better buying opportunity in the future. Even though analyst price estimates are kind of shooting towards around 116 a share for Activision, I want to have a little bit exposure in case that does happen, but assuming it's going to continue to go down a little bit, I also want to make sure we have some money on this side to add additional shares. Also, if EA presents a really good buying opportunity, I want to make sure we have cash on the side to buy that as well. So I'm not counting EA out. This was just a review on Activision, so of course that's going to be the one I'm buying, but I'm still considering actually adding EA to the portfolio as, again, a fairly safe investment, but one that could offer some more growth to the portfolio rather than just looking at dividend producing companies. So let me go ahead and do that, and I'll be right back with you. Alright, so I did go ahead and add the 15 shares of Activision to the portfolio, and my cost basis started at $79.90, so we've already made it a little bit on Activision, but one that I'm excited to have to the portfolio. Admittedly, when I owned it as a shareholder, it wasn't the best performance, which is why I ditched it. Looking back, hindsight's 2020, but wish I didn't sell it, and admittedly, that little bad taste in my mouth that it left for me is the reason why it's taken me so long to do this for the Watchlist Wednesday. But taking a look at the overall portfolio, we're up around $8,600, which is perfect to see. I am going to look to add some more growth into it, being more conservative with the growth choices that we have here. But it's just kind of hard to see the results from dividend investing on paper trading. So be on the lookout for more growth companies. Also wanted to apologize to Timmy Pom Pom. I will take a look at Rocket, but I don't typically invest in IPOs, and that one just very recently hit the public markets. So one I'm going to hold off for watch this Wednesday, but I can gladly do an analysis sooner, so stay tuned for that. Also, for all of you out there, if you have any companies you have questions on, any questions about investing in general or with real estate, or if you happen to be looking for a house in the Charlotte market, let me know. I can help out with that as well. But with all of that said, I should say, if you liked this video, I hope that you like it. If you haven't subscribed already, I just hope that you consider doing so. But with that said, I think that's going to be a great place to end this episode here for today, because I actually have a showing appointment to get to. So thank you so much for taking the time out of your day to watch this video. You could be anywhere in the world and you're right here with me. So I really appreciate that. As always, let me know if you have any questions, but I hope that you enjoy the rest of your day, and I'll see you next time. Also, before we wrap up, hope wearing a Grateful Dead shirt didn't take away from any of my credibility for this. I like to dress comfortable, I like the Grateful Dead, and that's what I put on today. So don't let my clothing style or style of clothing steer you away from the content that I create. If you have any issues with that, also leave a comment below, but we'll stop there.